If you're watching this video, you have probably heard or even traded order blocks, but still have some level of confusion when choosing the right ones. In this video, I'm not only going to break down what is an order block and choosing the right ones, but also showing guys market executions using order blocks in a way that's easy to understand for everyone.
Before we get into the video, make sure you guys are following me on Instagram at Arkhamtrades. This is where you can reach me, as well as I have recently launched my mentorship. These are all the benefits that come along with it. If that's something you guys are interested in for $10 a month, that's the first link in the description or the first link in my Instagram bio. Back to the video.
An order block is simply a change in state of delivery. What does that mean? It means that if the market is going higher and seeking higher and higher prices, right, the moment the market reaches a level of resistance or an area to anticipate a rejection, right, the last up close candle becomes, right, an order block, right? This is the order block. So our anticipation is market come back up into this last up close candle, right? And then we see the rejection lower. This is the change in state of delivery from overall higher prices to now seeking lower prices. So this last up close candle, that is our order block. So when we see the market reach up into this last up close candles, we're anticipating the market to find rejection to then see that change in state of delivery for lower prices. Same can be said for bullish prices, right? So if we see the market reaching lower here, right, the market creates some measure of a low, we see this break higher, right? We see this break higher here from the marketplace. This last down close candle now becomes our bullish order block. So when the market comes back down into this level, we're seeing the market reach higher and higher prices, right? It is the last down close or up close candle before a change in state of delivery. A change of state and delivery is a change in the market from higher prices down to lower prices. And the best representations of order blocks that I could give you is that if we know that the large players, which are smart money, if we know that they are the ones that are moving the markets, that are pushing the markets higher and lower, no, when the market reaches up into these levels and we see a strong break lower, that can give a signal that smart money has entered the marketplace, right? That smart money reached up into this level here. We see this break lower. Smart money sold positions at these highs. If we know anything about smart money and these big banks and these big hedge funds, we know that when they enter the marketplace, they enter on heavy size, hundreds upon thousands, if not millions of contracts, per execution using limit orders, right? So if we know that smart money is entering the marketplace, causing the market to then see this drop lower, right? If we know that's caused by smart money, then we know that when smart money enters the marketplace with their orders, not all of their orders get filled. Meaning that if smart money is going in with 1,000,000 contracts, not 1,000,000 contracts is going to get filled. Most likely 500,000, potentially 600,000 contracts are going to be filled, right? So the remaining, 300, 400,000 contracts are still up here, meaning when the algorithm refers back up into this level, right, that's then tagging the remaining contracts from smart money. So if smart money goes short at these highs, 1,000,000 contracts and only 500,000 contracts get filled, pushing the market lower, right? Then that means there is 500,000 more contracts still up at these highs. So when the algorithm comes back up into these highs, right, that's then tagging the remaining 500,000 contracts. Then we see that continuation push lower, right, and smart money pushing the markets lower. Same thing here, right? Smart money it reaches a support level for smart money to then go long. They go long 1,000,000 contracts. They only get filled, let's say 600,000 contracts at these lows. right? There's still 400,000 contracts that has not been filled. So when the market comes back down into this level, the remaining 400,000 contracts get filled, and then we see the push higher. And that's the overall general depiction of an order block. It is the last up close candle, last down close candle that still has pending orders from smart money that has not been filled when they went long or short moving the markets, right? So let's go into our first depiction here, right? So as we can see here, the market has been moving higher and higher and higher and higher, right? At higher prices, right? And then we see this massive drop, this steep drop lower, right? It's safe to say that this drop lower here was not caused by retail traders. Retail traders did not cause this drop here. This was not caused by retail traders. This was most likely caused by smart money entering the marketplace going short. So if we know that smart money caused this drop lower here, then that means up here at this level, right, there is still pending orders. There is still pending orders at this level here, right? So we see the market go from higher prices to lower prices here, change in state of delivery from higher to lower. Smart money sold their contracts up here, right? Meaning these last up close candles here, preferably last three, right? 1, 2, 3, the last three up close candles right here, right? This would then identify as your order block, right? Because this was the change in state of delivery. Smart money comes into the marketplace, go short, right? They get filled on their contracts here, moving the markets lower, but they didn't get filled their entire contract. So this last up close candle is an order block. So what we can do here is we could put a limit order here, stop loss at these highs, targeting this low right here. And let's see what happens. Bam, just like that. We're on GBPUSD on the H1 time frame here, as you can see right here, H1 time frame. The key thing to understand about order blocks is this isn't a 100% win rate strategy. As you can see in this description here, we've been going higher, 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 right? And then we see this massive drop lower, right? You would think this would be an order block and you would have lost, you know, and this would have been a loss. If you would have taken this short, you would have taken a loss here, right? So no strategy is 100%. You know, always take that note. No strategy is 100%. But in this scenario here, right, we've been going higher, 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 right? We then see price create this high. Smart money shorts these highs. Market starts moving lower here, right? This last up close candle right here, this highest body, this now becomes our bearish order block, right? And as you can see, price has already came up and, you know, given you a setup for a 3R. But let's just say you missed this opportunity, right? You can get another opportunity as well right here, right? You can get another opportunity as well, just above this high, right? Above this high, right? Stop loss above here, above the order block. You know, take profit down here. So this would be your ideal setup, right? We've seen the market pushing higher here. You took a loss right here, right? You took a loss right here as the market pushed higher, broke above. You took a loss right here. But hey, you know, all you did was just scrape it off. Losses are a part of the plan. Continue to follow the same setup, right? The market gives one last high before then we see this break lower, right? Then you get another opportunity, this last up close candle, right? You put a limit order here, right? At this order block, and let's see what happens. Price comes up, tags you in, and it goes in your favor, just like so. Next, we're going to be looking at the DXY, or the dollar here, right? We can see that the market has been pushing lower, lower, lower. Then we get this break higher, right? We get this break higher. You know, market goes from lower, 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 finds support down here, finds support at the support level. We see this break higher. This last down close candle right here, right, now becomes our order block, right? So what we can do is identify the last down close candle before this break higher, right? Smart money enters the marketplace, break higher, last down close candle. We could put a limit order right here, right? Stop loss below the order block. And as you can see, the rest was history, right? The market moved a total of like 9R, just like so. I hope you guys learned from this video and I was able to provide as much value as possible. If you guys are looking for a more in-depth, deeper topic on order blocks and how I personally trade order blocks, I just released a more in-depth video on order blocks on my Patreon, which you can find in the link in the description or the first link in my Instagram bio. I'm Arkham. Be safe.